Imagine stepping back to the year 1925. The world was different. Radio was the hottest technology. Cars were just becoming affordable. And the idea of ordinary people investing in the stock market was still relatively new. But let's ask a powerful question. What if you had invested just $100 back then and held on for a century? At first glance, $100 in 1925 may not sound like much, but adjusted for inflation, that's worth about $1,800 in today's money. A meaningful sum, but not life-changing. Yet, in the stock market, patience and compounding are everything. The broad measure of U.S. stocks is the S&P 500 index. Over the past century, it has delivered an average annual return of about 10% before inflation, or 6 to 7% after inflation. That may not sound dramatic in a single year, but stretched over decades, the results are staggering. If you had put $100 into U.S. stocks in 1925 and simply reinvested every dividend ever selling, never panicking today, that stake would be worth roughly $1.4 million. Yes, $100 into the market turned into more than $1 million, not because of luck, but because of the power of compounding interest. Of course, it wasn't a smooth ride. You would have lived through the Great Depression of 1929, when markets collapsed nearly 90%. You would have faced World War II, the oil crisis of the 1970s, the dot-com bubble, the 2008 financial crash, and the pandemic shock of 2020. At times, you might have felt foolish for staying invested. But those who held on were rewarded with growth beyond imagination. Now, compare this with holding on to cash. If you tucked that $100 under your mattress in 1925, inflation would have slowly eaten away its value. Today, that same $100 would buy only about $7 worth of goods. The lesson: doing nothing with your money is the riskiest move of all. Even bonds, considered safer, tell a different story. If you had bought long-term government bonds in 1925, your $100 would have grown to about $9,000 today. Not bad, but nowhere close to stock market returns. So, what explains this massive difference? It all comes down to ownership. Owning stocks means owning real businesses, companies that invent, produce, and grow with the economy. Over a century, businesses expanded. Technology advanced. Productivity soared and shareholders were carried along for the ride. But here, the hidden truth. You didn't need to be a genius stock picker. If you had simply invested in the market as a whole and stayed consistent, you would have achieved millionaire results with just that one $100 decision. And imagine if you had invested more. $1,000 in 1925? That would be worth over $14 million today. $10,000, a jaw-dropping $140 million. This is why long-term investors call the market the greatest wealth creation machine in history. Of course, past performance never guarantees the future. Markets move in cycles, and risks are always real. But the undeniable lesson of the last century is this: time in the market beats timing the market. So next time you hear someone say, the stock market is just gambling, remember this story? Because while gamblers lose over time, patient investors have history on their side. In the end, the story of $100 becoming $1.4 million isn't really about money. It's about human progress, resilience, and the extraordinary rewards of patience.